How's everyone doing today? So we're going to take a little look at DraftKings. DraftKings continues to get sold, coming back off the recent highs of $25. The narrative stays the same. So what was the narrative? The narrative was, really to start the year of 2022, DraftKings was pretty range bound. That $19, $20 level into that $23, $24 level. We obviously did wick to that 25. So here's the storyline on DraftKings. If you want to see DraftKings continue to be bullish, not continue because we've been selling off, but if you want to see it start to get bullish and start to continue to be bullish, you're going to need something in the market to turn around. What you're going to first need to see is you're going to need to see the IWM start to bottom out and start to reclaim some supply levels. IWM technically right now on paper, according to what percentage it's down, it's in a not a corrective but a bear market. So you have pullbacks, you have corrections, and you have bear markets. IWM, which is small caps, are in a bear market. DraftKings off its highs 70% or 60%, something like that, is in a bear market. The triple Qs, NASDAQ 100s, tech heavy stocks officially are in a bear market. Many stocks are in a bear market. A lot of small caps are in a bear market. So how do you trade a bear market? Well, that doesn't mean that you're not going to get green days, and it doesn't mean that you're not going to get intraday bounces. If you're looking to play intraday bounces in a bear market, you want to make sure you're taking cash flow extremely quick, meaning that you want to make sure it confirms a level of supply that had some consolidation in the past, and you want to get long, and then you want to take profits into the next area of supply. I'll give you a quick example. As we're trading below all levels of supply on DraftKings, currently lows today $15.12. Currently, this is the lowest close in the whole formation. If DraftKings is to lose $15, this could essentially drift lower, $1, $2, $3 lower. Does it belong down there? Probably not. But is that just the nature of the game? 100%. Doesn't matter right now. Stocks are not going off of valuation. Stocks doesn't matter. If they have MLB, season that's going to start up again. It doesn't matter that March Madness is coming. March Madness has nothing to do with what's going on in the stock market. Okay, so just because more people are going to be betting on DraftKings, and yes, maybe earnings are going to be higher. One thing that I'm going to explain is that the money that they're spending to acquire customers, which is AKA bettors, the money that DraftKings is spending to acquire is not going to be eaten up by the people that are betting. Okay, not this quarter, not next quarter. It's not going to be for at least in maybe 2-3 years. Not saying that DraftKings is not going to be profitable in the long term. 2, 3, 4, 5, 6 years from now, I think DraftKings probably be $100 stock. But right now, because that's where we're at, right? We have to take everything day by day. We can't talk about something that's going to happen in 2 years. Talk about that today, because what's happening today is what's going on in front of us. And what's going on in front of us is this is the lowest close in the whole formation of DraftKings entirety on the stock market. So here's how you can trade balances in a bear market. Here's a supply level here, previous areas of multiple touches of resistance on the 1 hour time frame. Okay, so $18.60. If DraftKings is to break $18.60, it has room back up to $19 and $20. That's where you're going to want to get long, and you're going to want to take profits into that 19 and 20. Okay, if we get rejected at $19, $20, essentially, where would we be headed? Okay, to the previous area of resistance, which is 1860. So if you want to short DraftKings, you would short it at 19 or 20 with price targets of around 1860, and obviously a little bit lower down here at 18, and then previously down here at 1670. Now, if you want to hold a short on DraftKings, could we see a little bit of a bounce from $15 to $15.60, $15.70, $16? 100%. So just know that if you are holding a short position here down at 15, you are at the very, very bottom of the range. So if DraftKings does decide to bounce, it essentially within 1 week's time can bounce from $15 to $18, even $19, and still be in a bear market. So we could still bounce 3-4 points and you will get absolutely destroyed on the put positions. However, it depends on how you want to play it, because if you play it back into the 20 and there's some form of rejection here at the middle of the range and we consolidate and start to lose this area again and come down and breach the $15 area, we could potentially go lower and those puts will pay. Now, what about if you want to go long because you want to bet on maybe a weekly options contract, maybe you want to bet on a weekly pop, something of that nature? What you're going to want to do is use $15 as your absolute rock bottom stop. Okay, we're not here to mess around and let this thing squeal away $1, $2, $14, $13. We already know that we took out these previous lows here at $15.97. We know that we have new lows here at $15.12. So what do? We put a stop loss at $15. We buy call contracts going long. We buy some shares here. And what is our price targets? 15.79. Price target would be 18, and obviously 20, and obviously anything over 20 does have room back up to that 24.94. For me, still, before I get comfortable holding, is we have to stay over 15. If we lose 15 again, all bets are off. I close the position, I walk away from the trade, I come back at a later time when things are setting up again. So what do we have right now? We can completely enter the trade long, for an anticipation of a little bit of a relief bounce, but just understand that until we take out 25, this stock does not have any room to go. The current range is between $15 and $18. Let's just call it that. Anything over 20 has room back into that upper range that we were trading at for weeks, which is $20 to $25. Those are your two ranges. Play them accordingly. Being that this is a new range that's formed since we've put in a new bottom, $15 is our absolute low. If we lose 15, we have to exit the position on the calls. If you are holding calls, you need to exit after a break of 15. If you're holding puts, you don't want to see us start closing back over $16. If we start closing over 16, just understand that we have room to 18. I would want to start shorting the position right around that $18 or $20 level. Again, back down towards the lows of 15. And obviously, as I've stated at least 2 or 3 times in this video before, anything below $15 could continue a slow fade until this market decides to get its act together. And a slow fade could take us down to $14, $13. Hope to not see that happen, but just kind of giving you guys technical analysis. That's basically what the stock can do. And if you don't believe a stock can go lower, ask any penny stock that's being traded on the OTC or the wherever penny stocks trade. Stocks don't just IPO penny stocks. The market makes them a penny stock. If you don't think a stock can go any lower, well, go ask anyone who is trading skills or something like Wish. That's down 95%. Okay. So it is what it is. We have to just take, the good with the bad and the bad with the good. With that being said, guys, if you want to trade with me each and every single day live, join my Discord. That link is down in the description box below. Also, give me a thumbs up on this video. Leave me a comment. Let me know you guys' average entry price on DraftKings. See if we can kind of formulate a plan. If you guys are kind of stuck in this trade, or you kind of want to figure out how you can hedge your positions so you guys can make money daily without just having to watch your portfolio bleed, join my Discord. Let's set up something for you guys. Again, I'm not a financial advisor, but I could definitely give you my advice as to what I would invest my money into. And then what you do after you do your own research is completely your own call. But definitely join the Discord. Let's talk. I've got people holding DraftKings. I've also got people hedging DraftKings in there as well. So, I'm a full-time options day trader. So for me, I'm going to be trading high beta stocks. That's going to be all of your Teslas, Amazons, Nvidias, AMDs, triple Qs of the world. But I always like to keep an eye on what's going on in small caps, because small caps are always predominantly going to lead us into the bear market, and they're also going to be the first ones to lead us out of the bear market. Right now, I do not see them leading us out at this point in time. But again, that's why I also watch these stocks, right? When these things start to bottom and they start to come back, and for me, come back means DraftKings over 25, is going to tell me that maybe the other bigger indexes will be following suit. Until next time, guys, I'll see you guys on the next trading video.